Welcome back to the channel, everyone, and another episode of Investing Through 2022. This series will be a combination of highlighting current economic and market events, along with documenting my investing journey throughout the year. Full disclosure up front, my portfolio is 80% plus at any given time Tesla long, and this is not financial advice or a recommendation to take any particular action. With that, today's episode revolves around an ETF called UVXY. I've been leveraging this ETF throughout the course of the year to capitalize on market volatility. There's not much I'm certain of in the market at all this year, with the exception of volatility, and UVXY has been my go-to ETF to capitalize on that opportunity. To showcase how UVXY moves, I've plotted it against Tesla along with the S&P 500 to give you a visual of the negative correlation it moves with the market. But before we talk about that, I want to jump to UVXY's investor page and just go into a little bit more detail what this ETF really is. They start off by saying UVXY is designed for knowledgeable investors who seek to 1. Profit from increases in expected volatility of the S&P 500 as measured by the prices of the VIX futures contracts. 2. Reduce U.S. equity portfolio risk, since changes in the VIX short-term futures index have historically been negatively correlated to S&P 500 returns. 3. Intended for short-term use, investors should actively manage and monitor their investments as frequently as daily. And we'll talk about why this bullet point is so critical a little bit later on when we take a look at UVXY's chart, and you'll just see the dramatic volatility that UVXY goes through on a daily/weekly basis. And then lastly, does not track performance of the CBOE volatility index, the VIX, and can be expected to perform very differently from the VIX. So with that knowledge, let's take a look at the chart of UVXY here compared against Tesla as well as the S&P 500. Okay, so if we take a look at the chart of UVXY here in the green compared with Tesla in the red, and then I even left the S&P 500 in the blue, there's a lot we can take away from this. And as I mentioned, the objective that I wanted to get from UVXY was to capitalize on the volatility, also to have something that moved negatively correlated to Tesla. And so if we just move through some of the low points, we have a low here in Tesla. You can see UVXY spiked. If we move a little bit further down on the chart, this big spike in UVXY, we have the invasion of Ukraine, and Tesla also dipped around this time. Moving a little bit further, you can see when Tesla started to rally is the exact same time UVXY started to drop. We were flat between the two for a couple days here, and then again divergence occurs a little bit later on as UVXY begins to spike and Tesla begins to trail off. So it's not a perfect correlation, as you can see, but still they do move relatively negatively correlated between Tesla and UVXY. We'll take a little bit closer look at UVXY on a daily and weekly basis to see how extreme some of these moves are. But overall, I've been relatively happy and feel like it's been filling that objective of being negatively correlated to Tesla and also taking advantage of the volatility. Okay, so now we have UVXY year-to-date pulled up exclusively, and the purpose here, I want to just demonstrate how large of swings this ETF makes. So we're going to go peak to trough here just to highlight the example. Despite going peak to trough, there is still a lot of movement within these ranges. So you can see here from January 12th to January 27th, a 62% move. And then if we just take another short range here from January 27th to February 2nd, it's a 30% drop. Another example, a short range of February 9th to February 11th in 2 trading days, a 35% move. And if we just broaden that out a little bit further from the February 9th to March 27th, there was an 81% move. to the upside. But if we reverse that to the downside between March 7th to April 4th, 47% move to the downside. Again, what I just want to show here is just how dramatic these moves are in a relatively short period of time. If we go just on the 1 day here, we can see a 5% swing, which, really, from my brief experience trading this ETF, a 5 to 10% move intraday really feels par for the course. Lastly, before we do jump away from UVXY, I did want to share the 1-year performance. As you can see here, this stock, if we even zoom out to their 5-year, constantly goes through reverse stock splits. We can get a little bit into the weeds with it here, but what I wanted to stress about this point is that this ETF is intended for taking advantage of the volatility. This isn't an ETF that's intended to, say, hedge against recession risk, or an ETF that you purchase and intend to hold for a year or longer, thinking that this will protect you in the event of a recession. It will rise in the event of a recession. That's not the objective of this ETF. This ETF's objective is to take advantage of the volatility. So something to consider before buying and holding, or buying and forgetting this security. Taking all that into consideration, I hope this was helpful. If you have any suggestions for upcoming videos or recommendations, or if you have any questions regarding UVXY, be sure to leave those in the comments. Don't forget to like and subscribe, and we'll catch you on the next one.